how this is not being covered in my kind of framework of the global financial system is this is a dollar story, right? And we've talked about it, right? It's resources for dollars. The ultimate destination is Ukraine wants dollars, right? So what we've seen, after, a massive drawdown in the US dollar, so year to date in 2025, basically starting at Inauguration Day, you've got the first kind of signs of a bounce. And what's going on here, so if you think about it, the dollar kind of adoption, like winning this business development deal is good for the offshore dollar. Now, it's not the same offshore dollar that's been operated in the post 1971 order after, the gold standard was broken, all of that. The gold convertibility was broken, all the Bretton Woods iterations. It's going to be a different offshore dollar system, but it's still critically important. So this bounce you see, the DXY index, this is what's being charted here. This is what most people follow when they're following the dollar foreign exchange. It's about 50% of the weighting of this index is euro, right? And so what you're seeing here, in my opinion, is a bottoming or a bounce with the dollar picking up strength versus euro, right? Because when the U.S. comes in to sign the BizDev deal, it means all these Ukrainian resources are going to be priced and exported in dollars. Exactly. So it perpetuates the dominance of the dollar, especially from a Western world perspective. Euro's the loser here, but it's not necessarily going to work. The new dollar system is not going to work the same way that it may have in the past. Like there are probably changes in shape, and that's where that key question, where the dollar is going to be routed. Are they still going to route through London? Are they going to route through, another financial center? It's TBD how this continues to develop and plays out. But what you've seen in the initial reaction, and markets aren't perfectly efficient, right? Not all the information doesn't process or get baked into price all at once. It has to trend until it reaches a new kind of boundary constraint, and then works off of wherever those parameters take price. But the initial direction is what you're watching for your first kind of sense of what's going on and how markets are reacting or processing the information and ultimately reflecting it into price. So how do you know that, or what are you watching for, right? So this headline came out yesterday after market close. It was about 6 p.m. on the West Coast, Pacific time, when I saw the first alert that this agreement had been signed. And at that point, the only markets open would be like Tokyo, like Southeast Asian markets. Maybe you're starting to get into Sydney, and then Shanghai will open up later. But what you'd be looking for as European markets open up is what is their reaction, right? Because it's ultimately the euro, which is kind of the EU financial system startup project and home turf, lost out on this project, right? They're not going to be able to get these mineral rights which obviously they would want, right? They want the natural resources. Ideally, you'd want to see the commodities priced in your currency for the benefits it gives your domestic industry and economy. They didn't get that. So step one, Trump locked in the deal. And you kind of see this, if you remember that famous photo from Pope Francis's funeral, like it was just this past weekend, right?
It's them alone.
Yeah, it was them alone. Macron tried to join them tried to butt into the convo. Trump said, "Shoo, get away." These are the parties involved. So it tells you who wins, who lost. France, in particular, EU in particular, and it's started to bake in. The first reaction is the MSCI Europe Financials Index is going to be your European banks, in particular. They get marked down. This is the first move. It's not done. Markets will trend from here, but usually that first move tells you where trend is going. And right now it's, first response is down. This is good for the dollar. Not so good for the euro. Now they can still get the peace, right? If peace is the goal, but we're going to find out here in the next 1 to 2 months whether I think long-term peace is something that they value, top of their list, or is it something else, right? They want to dominate, they want the industry, all of that. So we're going to find that out in the months ahead. Any other kind of feedback on that topic? Oh, just to summarize, we talked about the dollar rallying, but you've heard me say before, you get the dollar direction right, you establish that. That's your key puzzle piece for identifying where other important asset classes ultimately trend, right? And so you see this route, dollar up correlates with interest rates up, which is what you started seeing a sell-off in bonds today. So bonds reacted negatively on this headline, kind of pulled in that direction by the stronger dollar, which is, primarily driven by that dollar euro FX pair. And then the market paradigm that we've been on, we're in a fiscal pickle. I don't want to quite say crisis yet, but we'll call it a pickle funding situation in the U.S. So stronger dollar means higher interest rates, just based on interest rate differentials, that effect. Higher interest rates in the U.S. generally just under the kind of Latin Americanization of U.S. fixed income markets and U.S. risk assets means, in effect, you get this kind of triplet: dollar up, rates up, risk assets up, which is why you've seen, the pair kind of return, especially today on this news: dollar up, rates up, equities up, and then risk assets. You also include Bitcoin, lump it in as a risk asset for now. May not stay that way forever. On the zoom out perspective, it doesn't look like a risk asset, but on the short term, when you get your eyes right next to the screen, on the daily or weekly or monthly candles, correlates with your risk assets. And when you zoom out, that correlation disappears, which tells you it's not really there. The market has their perception wrong here. In my perspective, is what that's telling you. And then you see a flip on the other side of that, the negative correlation that you've seen with gold, right? Gold runs up as an negative correlation with the dollar, right? So you've seen the continuation of that gold sell-off after hitting that $3,500 resistance last Tuesday, right? So this all lines up